What's up, team? If you are not seeing live at the bottom of your screen, this is probably not live. It might be an old video. Thank you for joining us. I'm Justin. This is the Ivy League live stream. Huge day, huge 2 days. Not just in chat, but the market in general, the data. There's actually been some really good opportunity. I'm going to cover some of that. Hopefully, help you be able to become a better trader. All right, before we discuss talking about making money, this and that, you got to learn. You got to be able to be relaxed. You want to get comfortable. And if you ever want to get to the point where you can say, I think this is where the stock's going to go because of my probability or just reading a chart, one day you'll get there. You put in the work. Come hang out with us. We're live, 7:30 to 4 p.m. That's Eastern Standard Time. We cover earnings, all that good stuff. Again, thank you for joining us. That's my goal. My goal is to help you guys become a better trader. Not only, there's so much to trading that people don't talk about. You need to be able to read the data. How's the market going to take the data? Getting your mind there, being able to know the sentiment, being able to trade correctly because you're on the right side of the market and having a fundamental reason on why the market shouldn't be doing what it's doing. Of course, you're not always going to be right, and that's where risk management comes in to play. All right, that's the first thing we do. We manage risk first. We capture up or downside second. That's the name of the game. All right, if you want to last in this business, if you even want to make money, you got to keep your risk management in firm control. Can't over leverage yourself. There are times, yes, when you need to put your foot on the pedal. When things are hot, you get going, and you got to remember your confidence is up. Get in there, get your check, get your paycheck, get your steak dinner, whatever it is, your vacation, and get out. Tone it down because you don't want to give that stuff back. We're going to teach you all that stuff here. That's my goal. There's so much in trading that we could just go on for hours and hours. But tonight, we're going to talk about the data. We're going to talk about tomorrow's data and what we expect. We're going to do a if this then that scenario, guys. So thank you for joining. I'm Justin. This is the Ivy League live stream. If you could hit the like, share, and subscribe, it is greatly appreciated. It takes a lot of work to do these. I've been trading for 7 years now, 6-7 years, maybe 8. I stopped counting. It doesn't matter. All that matters is you come in, you do the work, and you have something to show for. All right. I mean, this stuff people don't talk about. They want to talk about like this beach and trading at the beach, doing this and that. You absolutely can. But you got to understand, this is going to take a lot of your time. It's going to take a lot of time, guys. You're going to have to run through data. You got to run through charts. You got to find what sectors are strong, what sectors are weak, so you can put yourself on the right side of probability. All right. And having a collective group of traders alongside of you, which we do it for free right here on YouTube, is really good and handy to do. It might cut some of that work out for you and save you some time. Might even save you some money. And that's our goal. We're here to save you some money. We're here to make you money. We're here to just have a community of traders that have one goal in common. That's to manage risk, make some money. That's it. And you know what? We learn and we grow as time goes on. All right, nobody's perfect. I'm not perfect. I'm going to be wrong, but I'm going to tell you right now, we have been on point. We've been on fire with these calls, guys, and I couldn't be any more grateful. But that also brings me to the point that I do also understand that the overconfidence can really bite you in the butt. All right, so I always keep myself humbled. Okay, I'm not always going to be right. I had a small red trade today. It was a small red trade. The market did what I thought it was going to do, but I messed myself up on the trade. We're going to get into that later. So where do we start? Like, share, and subscribe. Greatly appreciated. Thank you guys for being here. We're going to start with the data. So this morning we had ADP employment. Okay, this data is going to lead us into the market and what's going on. Okay. You guys, tomorrow, you guys already know that we're going to get some data that is going to move the Fed funds rate, could possibly move the Fed funds target. There's multiple things you could use, but you could also just use the CME Fed Watch tool, CME And I'm gonna pull it up right now. So what I want you guys to do, we have a 91% chance as of right now, depending on what the data comes out tomorrow. And I'm going to get into the data because it's important, guys. It's so important that I need you guys to try and start focusing on the chart, come up with your own opinions, obviously. But I want you guys to, like, even if you could, maybe like for a week. You just have to, if you can't watch TV or watch YouTube and gain and it controls how you think the market should act, or it starts putting you on the wrong side of trades, stop listening to the noise. Stop listening to all that. Just follow the charts. The charts told you 440, I think it was, right? 444, I think. 444? Yeah, 445. Told you it was a heavy resistance zone. It doesn't matter why. The why does not matter. What does matter is that you should be able to gain the confidence to go short up there and know how to go short. For how long? If you play options, you want to get time. All right? Maybe if you don't get time, you dwindle the position size down and you grab like a weekly. Okay, that's fine. But dwindle your position size down. You can also manage your risk by, putting on smaller size. There's all kinds of ways to manage risk. I just got to plug this in real quick. So let's get into it. ADP report came out this morning. All right, ADP employment came out this morning at 8:15. Now let's look. You had job cuts, but ADP is important data, guys. It gives you insight on the nitty-gritty of what's going on in each sector of the employment sector. Healthcare can involve babysitting, hospitals, drug costs. You can get into construction, new home builds, which construction would actually be in for like real estate, commercial and residential. There's two sides to construction, and many more. Go pull up the ADP, go online, go through the data so you know what sectors are struggling. You have hotel, consumer discretionary. Okay, there's a lot of data information that if you don't go see it for yourself, you're not going to be able to paint the picture on what's going on. A lot of these jobs also we're in a recovery from 2020 and 2021 when the world was shut down. Okay, so here is the ADP report. 497,000 versus a previous 267,000. Okay, so the estimate, consensus, and forecasted. I have this written down here. ADP payroll 497,000 versus 220,000 estimate. Okay, that's an increase. An increase of 497,000 versus an estimate of 220,000. That's a lot stronger than what, technically the market or the Fed wants. They want to dwindle things down. So let's get into it right now. What time of the year are we in? We're in summertime, guys. All right, this is June. This data is from June. That is statistically, if you go back, that this number is always high. The number is always high. So if the Fed, they're very smart people, all right? But if they start, it seemed like the Fed, I want to say it was a Dallas Fed, I think. I may be wrong. Don't quote me. But she came out really hawkish from what it seemed like, talking about more rates, this and that. It sounded like she didn't even care about. She don't even know about a lag effect. There's nothing there. That's not in her vocab. A lag effect is not in her vocabulary. Here's what I want to get into, guys. If they decide, this Fed, you want to watch this watch tool, okay? This is for July. Should be for July. All right. Now where do we go? We're going to go to September. 525 to 550. This has raised, and you need to watch this. You want to watch September. Let me see November. So it's 50-50 there, pretty much. So September. You guys want to watch this tomorrow when we get. I'm pretty sure it's non-farm payrolls, correct? Sorry, I don't mean to be doing that in the mic. Let me double check. I know it's jobless claims. Oh, I need to refresh this. Non-farm payrolls. I'm right. Yes, unemployment rate and non-farm payrolls, guys. This is going to be important. Now, statistically, these should be up. So what you're going to get from this is a lot of noise on CNBC and all these Bloomberg, YouTube, Yahoo, StockTwits, all of them. They're going to say, "Oh my gosh, they got to raise interest rates." You might even hear them start talking about 5 3/4, talking about 6. Okay. This is just 1 month of data points. That's typically always strong. So let's think about it. We had COVID in 2020. Okay, but we had a nice expansion in 2018, 2019, and then we got hit in 2020, and then into 2021, 2022. You have a lot of things going on. I'm going to use construction as an example, okay? Like, share, and subscribe because I think you guys are going to like this. Thank you. If I'm right, okay, I just feel like this 1 month of data, I feel like everybody is making it end all be all. Maybe it's just the thing to talk about, but I feel it at a level of where the market and the Fed funds is moving off of it, okay? I still think we need time, guys. I'm going to use construction as an example. You have all these new homes being built, okay? You have all these new projects that were permitted and had to be done. Those things don't get done in a matter of a year, depending on the job. It can take a neighborhood that I'm just going to use my area. Around my area, you're talking, I mean, we've got neighborhoods in here that could take you, that are huge, like 24-acre ponds, pretty big, 14-acre ponds, 20-acre ponds. Okay, with I don't know how many, maybe 1,000. I'm just gonna say a big neighborhood, big neighborhoods that can take and have taken 8 to 10 years, to if not longer, to get done. They're that big. Even just your other neighborhoods. Now we're talking from the site work to finish. They're going to take a few years. Now, what happens is you get all these jobs start to get done every years as years go on, and we're in a cycle where we're in a tightening cycle. As you start to get out of these things and go to get new jobs or, new work, I'm just using construction as one example, things can slow down, but I think we need time. You still have a lot of work that's from 2020, 2018, 2021 that's still getting done. That's not done yet. You also had all this money that was spent by the government. You had a lot of it go to use for roads and infrastructure. Those jobs and that money is still being spent. So people are going to be continuing to work. So it's going to be really, really difficult to say, hey, we just got X amount of trillions of dollars that we're rolling out, and you're trying to roll out interest rates. Well, just because it holds up doesn't mean that you have to continue to hold interest rates up at a higher level. And I think you're getting that notion, and I think the market is starting to say, okay, if you're going to give us 2 more rate hikes, now we know we're getting 1. We're pretty certain that we're going to get a rate hike. You're going to start to see the market say, Fed, Powell, crew, you guys are going to over tighten, and we're going to let you know. Are you ready for this? Because if you do, you're going to cause not only CPI to go down, but you're going to cause the economy, unemployment to really go down. All right. It's telling you, guys, the 2-year. Look at this. I didn't think we were going to see this again, guys. We peaked. Yes, we tailed off of it, but guys, we put in a new high. Now, I've said this before. I have some cool facts here. The 2-year, the S&P has never put in the low before the peak in the 2-year. So how high does this go? Do we go to 5.5, 5.25? Okay, is this it? And then we look for. It doesn't mean that we have to put in the low because it does. Just because the past is the past doesn't mean the future is the past. It's always different. They say. Just the fact that the 2-year has never peaked after the low, or the low in the S&P before the 2-year. Okay. I got something in my eye. I'm sorry. I heard something really cool, and this is just my area. Now, I in the area I'm at, it's pretty highly packed. There's a lot of people and stuff, so I'm sure in each region it's different. But housing has not come down. Now, I'm going to say I heard this, and I actually agree. You have the real estate sector. I would say it's in stagflation. You have high rates with high prices. High mortgage rates with high prices. That's stagflation in a nutshell. These prices are going to have to come down, and what's it going to take? Now, I've heard and seen in other parts of the country, this isn't the case, but the majority of major metropolitan areas, it is the case. Things are still, at least that sector, is still sticky. We need these buyers to step away, or it's just maybe it's supply and demand. Who knows? But it will get to a point where things should slow, where people are not getting qualified for a home, and then they have to go downgrade, and maybe their downgrade isn't there, so they don't buy a home. That means the real estate agent doesn't get their money, the mortgage lenders, the banks. It has its roots, and then they spread their money out. So the money for the bank, the electricity bill that they pay that goes to electricity, the trickle effect, guys. The paychecks that the workers get that go to the pizza shop or go to the grocery store or go to the movies. Okay? This all has an effect, and I think we need to give it time. So my point here, guys, is I'm going to tell you right now, I think if this number for September goes up higher, you're going to see the market tell the Fed, hey, you better watch out. The leading indicator, which is the 2-year, all right, is telling you things aren't okay. Things aren't all right. Okay? Things aren't okay. Doesn't mean you're going to get a 2008 type of recession. Okay? You hear people talk about 2000s. I'm tired of hearing about 2000. There's one major difference. It is the factor that separates 2000s from now. All those companies in 2000s weren't profitable. They weren't even profitable. At least the companies now that are running, you are paying a premium, but that's it. You're paying a premium for companies that have free cash flow, are profitable, ran damn well, are some of the biggest companies in the world. They are the biggest companies in the world. That's the biggest difference. And they're not trading at 160 times earnings, 200 times earnings, 140 times earnings like you had in 2000. That's the difference. That was speculative. That was future looking. These companies are supposed to be making money. That money never came. They never made the money. These companies have made the money. So that is the difference. And that is why the IWM is where it's at. It's not up with the SPY. It's not up with the Qs. All right? So I want you guys to realize that tomorrow when this data comes out, we're going to use the data to dictate how we're going to trade. I have charts I'm going to go over tonight. I'm not going to do them on the live stream, but I am going to go over the SPY. I'm going to go over some charts. I'm going to go over Google, Amazon and stuff. So I want you guys to start thinking about this. The market telling the Fed that they're going to over tighten if this is the rhetoric that we're going to get from 1 month, a statistically high month of data. The employment data and everything. It is spring. Okay? It's the summertime. People go out. The economy is active. Okay? People aren't cold and hunkered in their house and not going out. Okay, they're going to go out to the movie theaters. They're going to go to the beach. They're going to go out to the mall. Okay, you're going to have graduation parties. You're going to have weddings. It's just naturally a seasonality. Your employment is going to be up. Okay, whether it's new highs or new lows, whatever. That's neither here nor there. You just naturally, the summertime is an active season. All right, so if we're going to dictate 1 month of data and start talking about we need to do more, you might have another thing coming when the S&P is dropping 10 points in a day, gapping down. And it might tell the Fed, hey, you're doing too much. You need to give it time. All right. That is so important, and I'm waiting to see it. This market will we've all gotten bullish, so this data comes out. Depending on the data, we're going to see what happens. So tomorrow morning, when this data comes out, what am I going to do? I'm going to be probably playing SPX. I might play futures. I'm not sure yet. I still want to go over charts. It's been a really busy past couple weeks for me. Matter of fact, busy month. I've lost some family members. I've had a lot going on, but that's neither here nor there. God bless them. I still gotta, it's a lot, and this is the stuff that you need to realize is going to happen. You're going to have life show up, and you need to trade when you can, not when you want, because it's going to hurt you. All right. It's when you can go through your charts and be ready in the morning to do this and that. And that's practically why I had a red day today. I didn't think clearly. Let's go over my trade. What was my trade? We're going to talk about yesterday because this all stems from yesterday. We have been watching a few stocks, but mainly we've been watching the SPY, AMD, Meta. I haven't played Meta, but these two have been giving me what I've wanted. Let's go to the SPY. Yesterday. Now this all leads from yesterday. In the morning, guys, I told you all. Join us live. We're live for free. 7:30 in the morning to market close. 4, 4:15, 5, whenever. Depends on what's going on. Guys, we've been making some serious money in here, guys. Come pay us a visit in the morning. We come up with our pre-market game plans. We go over news. We have our squawk box. It's fun. It's a fun time in chat, man. So, and if you're new and you hear me say something, if you're not understanding what if I'm showing you something on the chart, you're not understanding it, just let me know. Pipe in chat. Sometimes I got to remember there may be new people watching this that aren't familiar with the markets and want to learn. And they also don't want to pay a fortune and give out their information to, this industry is also built on getting data and all that, but that's neither here nor there. If you want to have a place to trade, you want a place to learn, get some ideas, come join us. We're free. YouTube.com, Ivy League Trading, 7:30 a.m. to 4 p.m. So yesterday morning, I said, guys, girls, ladies and gents, pre-market, I was really adamant on right off the bell being long. Okay, I was adamant on being long right off the bell. All right, turns out that was the case, and we were long off the bell. Where was our target? 445. I said, off the bell, I'm looking for a long off the bell to this target, and then I'm going to switch around and go short. If you're new, I do not recommend you doing that. Okay, and first off, let me say I do not recommend taking trades literally right off the bell unless you know what you're doing. This is a rarity for me. I don't ever say, yo, I'm getting long off the bell. I don't do that. I do. This is probably the third or fourth time this year that I've done that. I was very, very confident, and my risk to reward was there. I mean, pre-market lows, we have a support here. I dictate how we get to or through pre-market lows. I could have also used, yesterday's low or 2 days ago's low, Monday's low. If we rejected there to say, hey, maybe this trade is to the short side now. So there's other ways I can go about this, and I can gauge my trades as I go. But if you're new, you may not be able to do this. Again, long off the bell, we set it pre-market. Clear as day. You can go back. They're on here somewhere. Just go back through the live stream and you'll see. In the morning, we were long off the bell. And we were short up here. Guys, this was so big. I said to be short at 445. Now, at the end of the day, I was looking at a few different stocks. All right. I had a few things going on in life, which it is what it is. But I said to be short. And right here, 12 cents, 12-cent bid, 13-cent ask to the put side for today's contracts being Tuesday. And they expired today. So you got the data. All right. We got the data. And now I know we have data. There's a lot of times where I'm not certain that, okay, what the market's going to do, this and that. But they were at such a price. They were so cheap. And I'm right here at the resistance level. Okay. That is risk to reward. Yes, we have data. I wouldn't recommend it if you got a big range and you don't know what's going to happen. I was fairly certain that the data was going to come in pretty good. Not good for the market. You know, the market wouldn't take it as good, but for the economy and for people. So, guess what? At the bell, those contracts went from 12 cents at close yesterday even at close. That's not even up at 445. They were 12-cent bid, 13-cent ask, and then today, market open, they were at $1.20, like $1.23 something. They were pretty much 1,000%. They were 10 times your money. Okay? I mean, that was 1,000% trade just overnight. Now, this morning, I watched them go. When I looked at them, they went to $2.70 some cents, just under $3. That's almost a 3,000% profit, guys. Come join us and listen to the analysis. That's all you have to do. Doesn't mean you have to take the trade. You use your own judgment, okay? I'm giving you my thoughts. These are my thoughts. That's it. All right? And when I make trades, I alert them. I tell you what I'm doing. If it doesn't fit your risk tolerance, that's fine. Okay? And if you're new, take it slow. I'm not sitting here telling you, follow my trades, follow my trades, because I want you guys to be able to do this independently. I really do. You know, I want you guys to come here. We come up with trade ideas. We have Squawk Box, and we're in here making some money at the end of the day. So this trade just overnight went 1,000%. Right around here, I want to say, is where they were almost, I don't know, 2,500%, almost 300%. They were almost $3. There was like $2.75. So whatever that is, 12 cents into $2.75, $2.80. Okay. Huge trade, guys. Huge trade. We 1, 2, boom. We had AMD also. We'll go over that. But so I traded the SPY today. Now, I was a little off. All right. I had to go run to the hospital early this morning. And I got back just in time to be able to set up the stream, get on. I already have my levels somewhat. I wasn't able to go through the data. I was not able to be on my seat and have my watch list. I wasn't able to do it. It is what it is. It happens. So I took puts on the SPY, or I took calls at this level. I wanted to be long at this level. So there was a few things I was seeing. Now, it's going to change, I think, with because when you get time involved, no, it's still there. So as you guys can see, I want to show you guys something. And this doesn't mean, because again, when they say the market can be the market can go down more than you can stay solvent, or it can go up more than you can stay solvent. This is what they mean. Now, I managed my risk. I made this trade small. Okay, I took a few contracts to the upside. It was I wanted to get a bounce back here. I started to feel, I think it was right around this candle. I think it was pretty early, and I don't usually. It's funny. I don't usually ever trade too early. Now, what happens? I want you guys to know this. All right. Now, really listen to me. In the mornings, if you're trading the SPY or the Qs, if you don't, if you know what you're doing, then just give me a second. See, the problem wasn't the fact of being long. That wasn't the problem. The problem wasn't being long. And you're right. It was, it could have been because it was early. My problem was I bought a daily. All right. I bought a daily because I was going to minimize my risk and see if I could get that upside I was looking for. We had a huge gap. Members were able to capture the trade, the overnight gap down and the upside prior, AMD. So we have earned the right to take the risk, is what I'm going to tell you. We've earned the right to take the risk. We're up fair. We got some money. Let's put a trade on because we want to be long here. All right, now that this data and this type of sentiment's going on with the Fed talking about raising, and which they've already said they want to do 2 basis points, but it seems like the market is going to say, all right, with this data, the market's going to start telling the Fed, you're going to overdo it if you don't give it time. All right, so I got calls and I got dailies. Now, they were down. My stop out was supposed to be here. Why did I not stop out? One, because I put on a very small position and I wanted to see how this was going to work out. Look at the technical indicators here. This is just the RSI. The MACD is probably doing the same. If I pan the MACD out, it's probably also putting in higher lows. All right, to an extent. Not really. It was, it did. It didn't do it until 10 o'clock. Kind of. 10:24, I mean. So maybe I should have been watching the MACD. But so look at the RSI, guys. This is what we call bearish divergence. All right, and now what kept me in this is because I had my risk small. I was managing my risk, but I also had some nice green trades that I was, I was comfortable with. I'm not giving back the money that I've made. I was not able to get prepared in the morning, this and that. So I looked at, I should have gotten time. I should have gotten time, and it hurt me. It didn't hurt me where I'm sitting here licking my wounds. I got a paper cut. Move on. No big deal. Look at the RSI, guys. Now the stock is pulling down, and the RSI is putting in higher lows. It's doing the opposite of what the stock's doing, and that's telling you the relative strength. All right, and I'm reading the tape, and I'm reading the level 2, and I'm reading the time and sales. And there's way more sellers than there is buyers. So listen, the only reason I can tell you why I did not stop once we closed below this green line right here, that's my target. And I also drew a circle, I think was right around here. Yeah, it was right around here somewhere, where it literally, you guys will have to see it. I'm serious. Guys, come join us and let the actions speak for themselves. Seriously. Maybe I could put up a video of it, but I literally put a circle, and the damn bars went literally right over the top of the circle and then went on. So that kind of stuff is with time. I would love for you guys to be able to get there, to be able to say, match up your time and price and say, yeah, I think like right here is where I want to, I want to see if it touches this. Like, you're going to put a circle on the chart and see if the candles hit it. That's what I'm getting at. So I did not stop. Now, this morning I said, if we close below this line, or this price area, 438.30, call it, I was going to stop out. Well, what happened is just this little bit of move on the way down kind of sucked so much premium out of those contracts, because I was out of the money, that even once we broke and closed below it, it didn't even really make sense to me to stop out, because they didn't drop. They dropped here. This is when they really lost value, not here. It was funny. So I'm like, all right, I'm going to give this thing a minute. No big deal. The RSI is, again, still rising. So I know we're starting to get some divergence. I ended up stopping out right here. I wanted to see a double bottom right here. I think right here is where I had my circle. I literally put a circle, and members can attest to this in chat. I literally put a circle, and it was to a perfect T, guys. I promise. It literally hit the left side of the circle and followed it and hit this side, boom, like right with it, and then did its thing. It might have been right here. It might have been right here. It might have been, I can't remember where it was. I'm pretty sure it was like right here where I had the circle. So I stopped out after that. I said, I'm done. I'm not even, I'm not playing this. So that was the SPY. That's okay. We're going to move on. We're going to go with our ideas for tomorrow's data. So tomorrow's data comes out, and we have a high number again, which I wouldn't be surprised if we do. It would be surprising if we didn't. You know what I mean? So we're going to see. Tomorrow's data is going to dictate what we're going to be doing in chat tomorrow. You can join us 7:30 to 4. 7:30 in the morning, we go live on YouTube. ivyleaguetradingyoutube.com. Come join us. We took back a lot of the price action today. So if I would have given myself some time and maybe even a little patience and looked at the MACD and guys, look at the volume. There was no reason. Look at this volume. This is a 3-minute chart. All right. I also use this. I use the Volt ratio, advanced decline. I use a lot of different things, and look at that. Look at the volume. Just straight to the downside, guys. There's just a lot of selling today. Anyway, we rallied. Now, I did not capitalize on the rally because I was in a daily. So this is why you might want to start thinking about getting time, because if you're playing dailies, I need you to know exactly what you're going to be able to. I need you to know what you're doing. I need you to be able to say, hey, the stocks, you're going to pick a place on the chart and see if the candles touch it. If you have trouble, not understanding and not having full not having the, I don't know the word for it. I got to get better at this. If you're not like 100% certain that, even if you're not 100% certain, if you can't say, hey, I'm literally going to buy right here as it wicks into this level and it closes below it, depending on how it closes below it. If it closes below it, I'm out. If you can't do that, then I would not play dailies. And if you are also the person that just because you experience a little bit of a drawdown where your options are red, or even if you go short or you go long and there's a pullback and you can't withstand that pullback, you got to come join us and get some help, guys. We can help you get through that. Seriously, there's a lot of different things you can do to be able to get through it. I do it on live. I talk my way through it. I'm like, look, if we close here, I'm stopping out. Or if we close below this area, I'm stopping out. That is what it is. Okay, so we closed below it. Now, do I look for the bounce back and fade it? Well, we're already 1.5% down already. So how much more left is in the move? Yeah, I'm just going to sit out and wait and see if the only way I'm going to take a position is if it's to the long side, because obviously the short side's already done. You get 1.5% in the SPY, how much meat is left on that bone? There's nothing there. All right, you just have the bone. You don't even have any meat. So start thinking like that. Look and say, all right, you know what? I'm bullish on this stock. The stock's pulled back, and it's flat. It's flat on the morning. We'll say, I don't know, it had an up day, and I don't know. Well, just as an example, if you're bullish on a stock and you're pulling back into support, okay, and the stock is down, it's just red or it's flat, chances are you might have a 2-3% move ahead of you if there's real momentum. But usually off of the bell, you'll get a rip. Usually when institutions want to be buying a stock, they're going to be buying it right off the bell. So on that pullback, you want to see after that pullback, or after that momentum rally, on that pullback, how much is that stock up? Is it up 5.5%? Chances are it'll probably just sit there the rest of the day if it gets back up to the high of the day. Doesn't mean that it can't put in a 13% day, but I'm just saying, if sometimes it'll set itself up where there's a gap down or something, but there was news, maybe an analyst upgrade, or just the company itself comes out with news, and then it was on a gap down, but that morning they came out with it, and then the momentum pulls itself up, and maybe it's 0.05% red. Like it's just about break even, and you get that pullback on light volume, boom, you know you're going to have at least 2% if the stock is bullish. So you want to gauge and look, whatever stock you're trading, how much meat's left on the bone, and the easiest way to detect that is to see how much percentage of the move is already on the day. If an average ATR is $4 or $5, and we're going to say the stock's already up 2% on a $4 or $5 move, chances are that move's done. And you're going to have to wait or find something else or wait for the next setup. All right. Doesn't mean it's got to reverse either. Doesn't mean it can't go higher. It's just your probability, your risk to reward isn't there. Because you don't know if it's going to push to that 5% day or 6% day or 13% day. You get that on a smaller cap, but... So that was that. Guys, last night on the live stream, what did we say? AMD. Guys, we've been all over this. We were short AMD yesterday also. We were long the SPY. We were short the SPY. We were short AMD. Like, we've been killing it. Today, member in chat took it. What did we say? I told you guys, this is only my instinctive, this is just what I think. I said 110. You need, one thing is 110.50. Let me see. All right. 110.50. We are to be a buyer. All right. We are to be a buyer at 110.50, guys. And what did we get? What did we get? You got just about a double bottom right off of that level. Let's go into, nah, it was just it was a V. This is the type of price action that I always speak about. See how it hits the level? Boom, look at that tail. And goes. And that was it. I actually, because I was in the trade, I was playing the SPY at this time, 954. I should have been looking at something else. I wasn't. Okay? I learned from it. All right? I learned from it. I didn't realize, until a little bit later on that I'm like, man, AMD was at that level and it was already up here. So I was like, and obviously there was still more room to go. It still didn't finish green. It didn't finish the day green yet. So we said we were short yesterday, by the way, guys. We were short at this level. Yesterday you had, it was either the CBOE, at least the options trades on mine, were the bid and ask were mixed up. The bid was higher than the ask on this sell-off right here, on this wick down. So we were short yesterday, but we said 1050 is the target, guys. Listen. So I tell you guys, before I do a trade, what my targets are, where my stop loss is. I talk you through when I get in a trade. I'm talking to myself. I'm talking to you guys. Maybe you guys are talking to me. Whatever it is, through the trade. This is so important that I wish more people were able to see this. Okay? It is important for you to realize mid-trade, if we said to just get long at this area, you have to. We laid it out flat. Why it was important to at least even put a tier 1, like put a small position on. All right? Put a small position on right here. It breaks down, a little bit of money lost. We've already made money on the short. This is how you manage risk. You get your losers to be a lot smaller than your winners. That's how you make money in the market. That's it. You keep your losers small. You let your winners go. Okay? If it's green, just let it get to you. Say, you know what? If the stock is green, you don't have to be a pig, but you can pick an area and say, you know what? If it pulls back to here, let's say if it pulls back to, we'll say this, right? We'll say we're in AMD here. I'll say if it pulls in and it closes below this base right here, and this is where the stock is, right there. The stock's right here. I say, if it goes in and if it gets to this target, I'm taking a profit, obviously. But if we start pulling back and we break below, we get below, you could do it there also, because but I meant to do this because we don't know that that's there. I wanted to say here, right there. Shit. So if we break below that level, come on now. She wants to freeze up on me now, doesn't she? Yep, it froze up on me. So, yeah, there we go, guys. We got it. You see this flat you see this flat top support right there? We know that there's support there, so we can say, all right, if this breaks down below this line, we're getting out of our whole position because something's changed. It's no longer going up. You're going down now. Now, instead of going, this is what I like to do to help me trading. Instead of going to here, we're going to here. You know what I mean? So at this area of support, this little base right here, anywhere in here, you can say if it gets down and it closes a candle below this line, and I'm talking about from this green candle on, if we're long, I'm going to say, because if I'm long down here, I'm going to say, all right, I'm coming into my level. If we don't get to my level, I'm going to take profits, obviously, in front of it, depending on the strength. But again, if you've already taken profits and this is just a laid back trade, just pick a candle, pick a base where you've seen it pull back, and it's like, even if it's trading sideways, say, you know what? If we pull back and we break below this, I'm out of the whole position. Or if we get to the bottom of that extension candle, or if you get to this pivot top right there, if we get back to that and close below it, I'm out. Just pick an area, because obviously if you're up here, something's changed if you're coming back down here. And obviously, because it didn't put in a new high, doesn't mean it can't gap up tomorrow. These are things you can do during your trades that can help you stay in them, and speak to yourself. I don't care if they think you're crazy or not. If you even have people at home with you or whatever. Like when I was long the SPY a couple of days ago, it put in like this kind of same pattern. All right. I said, I will know. I got long at the support area, and I said, if the stock gets to here, it's changed. Or nothing has changed. It's going strong because we're not breaking this level. And look how it never closed the candle below the level. Now, if you see a stock pull back into that support, and during the candle it goes below it, depending in the manner. Now, if it just flushes right through it and it's just not bouncing back, okay, and if it flushes through it even quicker, chances are, depending on the amount that it's doing it, if it's putting in these little wicks, this little 5 cent, 4 cent, 10 cent wicks, just breathe. Wait for the candle to close. If you're in a 1 minute, maybe even a 2 minute, I wouldn't suggest this, but a 3 minute, 5 minute, even a 15 minute, I would just say a 3 and a 5, guys. Use a 3 and a 5 minute to decide, hey, if it closes below this support line, I'm just going to get out. Even if it goes higher without you, that level, it closed below it. It's no longer support. Now, if it's right at it, just below it, as you can see right here, it's just below it, okay? That's up to you. I wouldn't cut it off right there because it's an area. But you see these wicks? It's trying to wick people out, but it never closes down here. It never closes the candle down there. That's important. It's so important, guys. Those type of things can help you. Now, like I said, when I was in the SPY Tuesday, those contracts went over 1,000%. They were 1,500%. I was a buyer here on the SPY. It was last Tuesday. I was in Florida when we had that big rally day. I literally drew a circle, and I said, if it gets, I didn't draw it because I know the area. I said, if it closes below this support area, I'm getting out. Just go back to last Tuesday, not this Tuesday, but last Tuesday, and go look at the chart. It looks just kind of like this, where it pulls down into the support. But I was bullish because I could see it start to be turning itself up to go higher. I said, if we get back up to this area, because it tried to rally and it pulled back and it held. And I was like, all right, bet, I'm long. And if it gets back up to here, I know things have changed and now we're going. It's going to the upside because it's no longer breaking down and that support's holding. And if those candles start closing up higher, that's all I need to know. Hey, we're going to the upside. We're going to the upside. Think about those things, guys. Has the trade changed? Has anything about the trade changed? If you're short and the stock is going up and pulling back, it's putting in higher lows or lower highs and lower lows, chances are you're right on the short side. Let the stock do what it needs to do. And just pick places on the chart to say, Since it's down here, if it gets up here, yeah, we're going to the upside, because you're not going to go all the way down here to just go all the way back up here for nothing. You're bullish. Those sellers are not there. They're not pushing the stock down. It's either going to trade sideways or it's going to rally, or you're right. So we called that out. A couple members in chat today caught this trade at long AMD. We've been on it. Short yesterday. They were long today. I wasn't. Had some things happen. Tomorrow I'm gonna be ready, guys. So let's go to the SPY. Let's come up with a game plan. This level. So there's 3 levels that I really want to be a buyer if we get there. My number one level that I am just, depending on the sentiment and what's going on. I'm on a 2 minute. That's why. We'll do a 15-minute chart. All right, let's do this. Look at this level, guys. We still have a double top with a. I don't think we're going to get there. We still have not tested this double top right here, guys. The Qs did. That's the level right there. All right. We still have not tested that level. If we get there, I mean, you tested it here, but I feel like it could have used more. I'm pretty sure this was the Tuesday right there. Yep. You see that, guys? This is a 15-minute chart now. This was the long I was talking about. See how we went up, but we pulled back, and I was a buyer here. And I said, if we get to here, it's on, because the trade has changed. This is not a selling. That was just a pullback into the level to shake people out of the trade or to bring in new buyers. It brought in new buyers, and I had a circle up here. I said, if we get here, now mind you, it's a 15-minute chart, okay, that I told this is how I was able to keep myself in the trade, guys, by doing those little things. There were so many wicks. Look at all these wicks. Boom, 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 boom. And I'm like, man, I'm not sure. And I drew the circle there. I literally just I didn't draw it, but I put it. I said, if we get here, we get to this area, things have changed, because we're above VWAP, but not even a worry about moving averages. It's just, look at that wick. Boom. And if we get back up here, that tells me everything I need to know. Tells me everything I need to know. And I did not expect this. I did not expect any of that. I'm just looking for a trade to the long side. I got my previous high a day. I got my previous close. I got my reasons why. Playbooks are so important. And matter of fact, this was on our playbook that we talk about. Down day with a gap up. We test the close or the low, and they do not break. You go, just please join us. That's all. Just let the live stream, let the analysis, let the chat, let it speak for itself, guys. I urge you, if you're a new trader, or if you don't want to spend, you're tired of just spending a bunch of money. And the thing is you don't have to hear me sit and say, this will be the last time for anybody, the new members, this, that, blah, blah, blah. I'm only going to give you 5 minutes. I'm going to give you my analysis 5 minutes before the open, or you don't hear from me all day long. No, I'm here. We are all here. All right. Maybe something happens. I want to bring people on. All right. I want to have a group of traders that we all do this, guys. And not just me. Not just me. All right. So there's ways that we can do this to where we don't have to charge people a bunch of money and then have them sit through. You pay money and then you still have to sit through a sales pitch, guys. Forget that junk. And then you sit through sales pitches just to get an analysis of the SPY. That's so sad. That tells me they have no respect for your time. They have no respect for your time. Especially if they want to do all these sales and shit like that, but they're okay with charging you more than the other person when they're just in need of money. They don't respect you. The electrician doesn't tell you, hey, if you don't have me come fix this today, I'm going to charge you $1,800 more the next day. What? You're just going to have another electrician come on, step in, and take your place. Talking about, it's all of them, guys. I'm not just talking about one group. I'm talking about all of them. All right? They come up with all kinds of tactics, and you need to know where your information goes, guys, too. Don't just hand your debit card over to somebody you don't know. All right? You have your private information. There's a lot of money in data. And a lot of these people that are in this business are data brokers or were data brokers. Trust me, they get paid for your address, your name, your email. Okay? They can use that to their advantage, not yours. So the analysis on the SPY, guys, let's go over this real quick. If it comes in, if the numbers come in low, like there was a contraction, I want to see if we can fill this gap. All right, I want to see what we do when we get back up to this gap fill here. We got two things going on here. All right, you have an island reversal here. All right, and then you have an island reversal here. So you have a island reversal, and then you have a reversal of the island reversal. So this is a mixed bag, but this support held. All right, we didn't get all the way down to it. This was my other target where I said, yeah, I got to be a buyer here. As long as the catalyst is, there's nothing that is bad that brings us here. So let's see the data. Let's go to the daily chart because, guys, again, we're still above the 50, 100, 200. Now we're looking like a normal market other than the fact that the IWM is not up with the market. I got to clean up these lines. I apologize. I got to make them a lot cleaner for the live stream. I'm just going to get rid of them. I don't really need them. I know where my levels are. You know, we're holding the trade line. Like, look how we've been holding this trade line. We gap up. We've pulled back. Look at the tail. I wonder if we stick this level and continue higher. I don't know. We got to wait and see the data. So I'm going to have Tesla, Amazon. Let's see. Some tickers later. Curious your thoughts on Amazon. Yeah, I got you, bro. Let's do it right now. I was going to go do a lot of that stuff in the morning. But sure, we can do whatever you guys want, man. How you doing tonight, bro? How's the family doing? How you doing, man? You know, like today for me, it's all a lesson, man. It's all a lesson. You know, I should have never took a daily. I should have been more patient. I should have known. I was not ready to trade that today because I got the stream going and everything, and it was like 10 minutes before the open. And I had done no due diligence. I was up till 2 in the morning the night before trying to get things done for this. I watched the stream. Because there's a lot of stuff that I want to get better at as far as the stream and stuff. If you guys have any comments on like things that I could do, I'm going to get a new microphone. I didn't know anything about how bad this one was. You know, because when I tried to get a couple of things that I needed, because I've been trading for a long time and I've done it by myself, but I've seen so much junk out there where they just take advantage of people, and I hate it. I seriously hate it. And they all say that they're different. They want to help. They probably do want to help, but it tells me that they don't respect you if you're continued this sales pitch over and over and over and over, and you pay for a product only to continue to get a sales pitch for more things. But I'm going to tell you right now, if you're going to try and sell me, oh, you need to try this, you need to try that. Mother trucker, if that first thing I bought didn't work, why the hell would I give you any more money? And I think a lot of people need to start thinking that way. Don't just say, oh, well, you got to try this. This is going to help. No. The first product was the one that was the best. That this was going to help me become a better trader or do this and that. I don't need to do it because I've been trading for a long time. I've gotten an education from an actual person that's been on Wall Street. Still, he's a fiduciary. Him and his father for a very long time, very respectable. This person is still the best trader that I personally know of. All right, this person called Meta downside before any of you guys do because he listens to conference calls and he knows how to read conference calls. This just to give you an outlier. All right, they all say that they're the best. They have the best group. First off, this man said Mark Zuckerberg's talking about a whole nother product, the whole thing, not talking about Facebook. There's a problem with the original business that works. If the original business that isn't working, that's a problem because that new product's going to have to show itself. And if you're doing a new product, then that means there's something wrong with the original business that got you here in the first place. And he called it. And that very next quarter, you've seen what happened those 2 quarters and how fast Meta went down. So just being able to read and analyze an earnings call and analyze data, all right? I want to be that good, all right? I need to read more and listen to more. I need to be on more earnings calls. All right, we all do. If you really want to get a gauge on companies and on the future of what's to come, You got to listen to earnings calls. We play them here on the live, guys. There's a lot of information. Go listen to, if you want to learn about options and like strategies for bear market stuff, go listen to Interactive Brokers earnings call. They have some stuff on there. So I just don't want you guys to have to sit through a sales pitch. I want you guys to be able to have a place that you can go to and trade, learn, go over tickers, do all that stuff, and it is what it is. It's what we do. So let's do this. Let's go to the weekly chart first. I don't like that there's a monthly chart on here. And again, stop getting upsold, especially if the first money that you put into yourself doesn't work. Do not listen to them and say, well, this is going to make you better. You should do this. That means they don't respect you or your money. How about you give me the help and if things turn around, how about I tip you? Or how about I'm okay with paying to go over charts and hang out and go over charts, or VIP access. This whole industry is so ridiculous, and the people that say they are the industry or they aren't the industry are the industry. Okay, I'm not the industry. I'm here right now with you. All I'm asking for is a like and a subscribe and a share. That's it. All right, guys, look at this. This is the first thing we see on the weekly chart. All right, you ran smack into that 100-day. All right, so that is our first sign of resistance. It tried to clear it. We have one more day left. So another cool thing that you guys can do to analyze is looking at the weekly chart, knowing the candle. Okay, knowing the weekly candle, because you can use the candle to say, hey, if we get upside, I know we'll probably, chances are, let's see, it held support. Chances are, look at this area right here at 129. See how it was resistance? And then we opened up, you drop back down, and you blasted through it. And it held. This held. And what do you have coming in? The 100-day is coming in hot. The 100-day is coming in hot, guys. Or was, at least. It's going to start flattening out now. So it broke the 100. I want to see if Amazon. I'm going to put this level up and see if it's of any importance. Okay. I don't know where these dots come from. Shit. All right. I don't know. I guess I'm not moving it. So what's the price level on this? This is 129.32. Let me just do this. Alright, let's go to the daily. It was 129.32. So Amazon's been so extended. 129.32. Oh, look at that flat top resistance there, guys. Look at that flat top resistance. I don't like this. I'm going to have to switch to something else. It's hard to do these when the charts are like this. Maybe I'll go get TC2000. I like TC2000. There's a couple of them that I like. So, what was it 129.32 or something like that, roughly? 129.32 it was. 36. Yeah, it was this. See how that weekly candle led me right to this area? I don't know what. Wait, what's going on here? Oh my gosh. It's alright. It's all good. So, what are my thoughts? Look at those wicks. I want to see if we can be short here, depending on the market. Here's what we're going to do. And I did catch the spike calls from the bottom today. I wish I would have held longer. It's 438. That's the thing with, yeah, 0 day. Oh, shit. See, it's hard because it could also reverse too, man. Like, it did do that, but we don't know for sure. I mean, you can kind of gauge the momentum. Like, if the day is starting out strong and the candles, like, on a 3-minute or 5-minute are kind of small and it's just going up, 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 kind of like Amazon, and the candles aren't all over the place. Usually that's a sign of just relative strength, and it's just straight buying. There's hardly any selling. Yeah, let's go. Rivian, it was banking news. I did actually have that written down on Monday because of what was it? Amazon and something with Amazon and Rivian. I know Amazon's been a big holder. So now, so look at this. This is a good example. I'm glad we brought this up. I'm glad we brought up Amazon. So this trade line has acted as support this whole time, guys. Now we've broken below it. Do we get, look where the trade line is in conjunction with where resistance is, which was support. It's been both. It's been resistance and support. Look at that. You see, can you guys see that? I don't know if you can or not. Look at that, guys. That trade line is going to come right in there. Does it act as resistance and we get a nice downside? I've been hoping to get like a second continuation. After this candle, I've actually been waiting to see if we could catch another candle to the upside with it, but I'm not sure if we're going to get it. If you didn't get that candle, you didn't get it, because that's a big payday to be on a candle like that. I was kind of hoping that Amazon would like consolidate for like 2, 3, 4 days and maybe get another rally. It hasn't. Let's go to the 30-minute real quick. So, oh shoot, and I don't have extended hours on. I can put them on so we know exactly every little nook and cranny of the stock. Oh, it's been in this range. It's been in this range this whole time. So what do we look for now? I want to see it tomorrow. Now, depending on the market. This is all going to depend on the market. What's the MACD doing? Yeah. All right. I'm going to be honest. I'm going to be quite honest with you guys. I want to see if Amazon gets back down to this 126.12. 126.12. Let's go to the daily. Is there any 126? Nothing there. So those are my thoughts there. Ultimately, if I had to be, see, all these stocks, this is why I wasn't really going to run through charts, but Rivian isn't going to matter. I can go through Rivian. See, depending on what the data comes out tomorrow is going to depend on the movement of everything. Like, everything was red today. Just about every sector, every stock just about was red today. We haven't seen one of those type of days in a while where everything was red. You had a few, don't get me wrong, there were a few that were green, but it was red across the board. So the data tomorrow, it's going to depend on the data. But if you were to have my pick right now, I want to see where we open up tomorrow. Maybe it might be, I don't know if it's too soon or not, because this, you could just tie this with the SPY. Like, if we get the bounce back to here on the SPY and even in Amazon, to test this level, go short up there. But if we can't break back above here, where is, let me see. I'm sorry, I gotta see, this is what I don't like about Thinkorswim. Like, the volume. Like, maybe it's me, I don't know. But this week's a little weird because a lot of people are on vacation. The volume is pretty dead. It's not that bad today, but as you can see back here, Jesus, of course it had to click. So that's my thought is I would watch this level. All right, I'd watch this level. If you break back up, look for pullbacks into this level. Look for pullbacks in the 428.75 if it holds, and see if you just get the long to the top of the range. Right now it's in the middle of the range. You got to be long down here, short up here until something changes. If you cannot get back up here, I'm looking to short Amazon, and I'll have it on my watch list actually tomorrow. This 120, this 128 level, or this 126. It's 126, and then you get to the 124. That would be nice. That'd be pretty cool. I wouldn't mind that. I'm sure a lot of people wouldn't. Oh, let me show you guys before I forget. Look at the Qs. I'm going to go over Rivian. If you guys can replay it, put those levels on your charts if you need to. What do you guys see on the Qs? Look at this, guys. I need you guys to see this. I'll put it on a daily too, just so you can see the daily. It doesn't matter what you have it on. You're still going to see it. Look at that daily. What is that? That's a Head and Shoulders, guys. That's a Head and Shoulders, isn't it? If I've ever seen one. It's slanted. All right. But it's not bad looking. It's not bad looking at all. I've seen uglier. All right, I've seen uglier. Okay. If you don't know what a head and shoulders is, it's a bearish pattern. All right. You guys see that? Look at that. Let me make it easier on you. Look at technology. Look at technology, folks. Look at that. Tell me that ain't something to be weary about. The thing is you have a lot of volume in here. But again, to the downside. Onto the downside. See, the volume wasn't too bad there. This part of the shoulder, look how the volume's just been dead. Look at this. I mean, honestly, guys, to me, it's neutral because of the volume. You do have a little bit of buying, but you also have just as much selling. I want you guys to take notice of that. That is the tech sector. That's Apple. That's all of them. Look at that. All right? Just be cognizant of that. And if we get yields and rates to go further up tomorrow, and the market's going to sell off, because this whole past 3-4 days or so, even I think last week when I was in Florida, I'm pretty sure this whole time rates have been going up with the market. Like rates and the market have been going up. Look at the past couple days. Have you guys looked at TLT? Look where TLT is. TLT is falling back down. It's in the 90s now again. TLT's back in the 90s, guys. We thought there was a glimpse of hope. And look at this. Look at the volume. There's volume with it. The equity market, listen, debt leads bonds, bonds lead equities. We may be seeing some downside in the market. All right, we're getting it on tech. So what is it going to be? I'm curious. I thought we had a nice rally. I got something really cool for you too. I thought we were going to have a nice rally because we had time. I figured maybe we had enough time, get through the summer, get into the winter, get into the fall, and then maybe start having a down winter, second half of the year. Have a down second half of the year, maybe into the first half of next year. Or first 2 quarters of next year. Now, I don't know if it's coming sooner. Here's one thing I want you guys to know. There has never been a bear market rally that's lasted longer than the decline. So let's go to the SPY. Let's go to the SPY. We could go to the Qs. It doesn't matter. Guys, this is TLT, guys. It's back down to these levels with volume. Look at the volume on that, guys. Let's go to the SPY real quick, and then we're going to jump to Rivian. So look at the bear market. We've almost taken back the bear market pretty much, guys. I think there's like 100. It's like 100 and some. So we'll just say, where was the bear market? It would be, I'd say, from here. Like here is the bear market because it's 20. I think it's like 15% down is the bear market, and we've taken it back. And you got to do the time that you could do things with time there. Maybe we get a pullback down in the 416, 400 level. I'm not sure, but doesn't this seem like we were just at 416, 415, just fighting it like a month or two ago, and now we're at 450, 445. So it just goes to tell you how fast these rallies can happen, and once they go, they go. So don't listen to the noise, guys. Don't listen to the noise. All right. Let's go to Rivian real quick. So tomorrow I'm going to be up early. I'm going to be running through my charts. I'm going to look at Tesla. There's a couple things I want to look at. That's some nice volume. So I thought you would have some small caps start popping off. I think we're mixed. I mean, technically, if you want to do the percentages off of it, the thing is you can't really say you're in a bull market with the yield curve that's inverted, and now you have a 2-year that's as high as the last time it was this high was 2007. So it's like, yeah, we're in a bull market because we've had a rally, but that also doesn't mean because it's not about what it is or what it isn't. all it is what's the market doing? Oh, have we rallied and we don't hold because now now this will be the second half of the bear market where now the recession's going to come in, because this is what I was trying to get across was the Fed. The Fed is the market's going to tell the Fed, hey, if you do what you think you're going to do, you're going to hurt more than just inflation. You're going to hurt the economy, and we're going to price that in. We'll just have to see. Let's just see what happens tomorrow. I think we're using this 1 month data, this 1 June data that's statistically always high because of the summertime for the exact reasons I gave you earlier. I think we're taking a little. They're looking at it with like it's like the end all be all. I think they're putting a little too much emphasis in it. I think they should give July, August, and September. See what you get for the next 3-4 months, because we still need time for these interest rates to filter through. Again, you've got the government spending money. You've had construction, all these, like you've had like projects and things going on before COVID, before like the 0% interest rate. And then you had things happen in the 0% interest rate environment. So it's gonna take a while to get like all these construction jobs and jobs for like traveling and stuff, like people's money around it. Like once those jobs get done, how many new jobs start to happen? You know, you might still have a lot with the government spending. There's a lot. It's weird, man. It's not weird. There's just a lot. I think we just need time. I don't think they're giving it enough time. If they want to go to 5.5, 6, let them do it. Let them crash this market. Let them crash home prices. So maybe some people will be able to afford a home, and then they can refinance it at a lower price. And then that's the way of life. That's how the American dream was made. And a lot of people have had that snatched from them, and it's a shame. Because it's like, how much do you have? Like sometimes 2-3 jobs, you're still not keeping up. There's a lot going on out there, and I think the Fed's got to do their job. So you're getting ready to come into the 50-day on the weekly. Let's look at the daily real quick. Here's the problem that I see. In order for Rivian to go, the first thing I see, look at the volume, guys. Look at the volume yesterday compared to today. You still need a volume bar. If you want to break higher to the upside, if you want to get up to this range here, you're going to need to get to 28. You're going to need a volume bar that outdoes this selling bar. Maybe. Maybe there was news. It did close up here. That's the one good thing. So that's the catch-22. The volume necessarily wasn't there. There was a lot of selling yesterday. Now, it stuck it though. It didn't pull back. So what would I suggest? I want to see a pullback to the 200-day moving average, which is around 2088. All right. So and then look, you got VWAP's not. I don't use VWAP on a daily. So I'm going to put a line right here and see if it does anything with the intraday chart. All right. Because this is what you're going to want to watch tomorrow, but you also want to see what happens with the data, because that's also going to be telling. And look at that. Look at that pennant. Look at that support right on it. Boom. And then you ripped right off of it. Okay. I want to, man, Rivian's been off. You called this, bro. A person in chat right now asking questions. Bro, look at this. He said, what do you think about the 18 calls a while back? I wasn't too sure of them. Me personally, I'm going to be wrong. I can be wrong. You're going to be wrong. You're not always going to be right. But if he would have got those 18, I can't remember when they expired and stuff, but man, he's in the money, and he got those calls cheap. He was talking about $18 calls. I know you were. You asked me about them. And, sometimes they hit. Sometimes they don't. But they would have paid, bro. And I'm not going to say if I talked you out of it or not, but sometimes, like, I can't justify the means because, like, I'm the type of person who wants to catch momentum and news, and I just want to get my day trade on. And I will swing trade, but, I don't want to have to, like, guess on, like, having a stock. Like, I need a fundamental catalyst. Now, you may know something about Rivian that I don't. I know, it's whatever. It was still in your thought process. Yeah, it was about 2 weeks ago. You're right. It was right around here. And you know what's funny? Look at the chart. Look at this chart. Now I got to pull up the hourly. You know what's funny about this chart? What is this? This is what I call weakness in the midst of strength. This is the shakeout. That, oh my flipping gosh. I don't know how this mouse, literally, if I barely touch it, it does its own thing. This right here. Look at that. You know what this is? That's the shakeout for the rally. So if you have like a rally, right? This thing's went up and it put in a base. It's not falling down. Look, it even starts to go higher and then pulls back. Boom. And then what happens? They come out with news. Look at the volume. Look, take notice of this volume, guys. Look at the volume on this thing. So Rivian's got something going for it. And institutional ownership knows about it. This stock could go. Now, you don't want to see a day like this. You don't. I don't know if the market still believes it or not. Now, you're not going to see those bars here. You still have a lot more buying. Like, look at these buying bars. Yeah, volume bars. The buying volume, whatever. So, you had a downtrend which changed. Downtrend, and then look. It curls up the bottom. What do you have here? You have a cup handle long. Alright? And then it puts in like a base. I'm going to consider it this right here, the rally. This is how I would look at the chart. I look at this as the rally. Yeah, you had a sell-off, but you pulled it right back. So you had a rally, put in a base, shake them out, and then the long. That's what I look for in a chart. Plain and simple. I want to show you guys that. When I look for a long-term, if I want to swing or do something like gold, I was long gold. I want to see a rally, it put in a base, and it can pull back a little bit. You know, it could curl. And then I want to see the shakeout only to rally its ass off again. So you'll get the rally, it'll hold it, it'll put in a base, and it might dip down a little bit, come back up. But before the next extension higher, you'll usually get a shakeout where it sells off, just like Rivian did here, followed by, look at that massive run. This is this here, if you guys can see it. This is a rally, consolidation, a shakeout, boom. All right? There's something going on with Rivian, and the institutions know it. You could tell by this. This is also a short squeeze, I'm sure, but there might be something, you know, Lucid ain't doing this, you know. So I think what Rivian has going for it is the fact that it's a truck, and they are probably the go-to for companies that deliver and do all that. So maybe they are at a, you know, unlike Tesla and stuff, I think Rivian has the upper hand because they're not making a sports car or this or that. I think they're going for the aspect of having a vehicle that they could sell to other companies like Amazon, you know, Best Buy, maybe like all these other retail companies and stuff that may need vehicles, you know, and this seems to be that. You had a nice rally, it consolidated. You know, it's going to go a little bit lower, but I call that weakness in the mix of strength because it's had a rally. It's not like a penny stock or a small cap where it just goes up one day and literally just crashes back down the next or a day or two later. It literally kind of held its gains, you know. I want you guys to remember this. If you ever see a longer term rally, a consolidation, maybe it goes a little bit lower, and then it has a small, it pulls back, and then you look for the volume. Like, look at the volume on this dip. They were buying the dip. Look at that. Look at them buying the dip here, especially on the close. Look at the next day. You didn't have nearly none of that type of buying volume as you did on the way down. You had one day to start it, but look at this all day. The second day of the rally, you had 1, 2, so it'd be the third day. Look at it. You didn't have one single sell candle. It's on and popping. So now it might be a little overextended. All right, but again, look at it. It's still going after hours. So it's hard to say where this thing's stopping. Let's see where this thing could go. Now that I'm looking at it, let's see where it's going to go. I mean, you broke the 200. So I want to pull back. If I'm a buyer, I want to pull back into the 200-day moving average, which is obviously that line right there, which is yesterday's or Tuesday's high or Wednesday's high. So look for a pullback here. See if we can pull back and it hold. It might even try to pull back to like, it might even pull back into here or even here. It might even pull back to this area right here. I would watch this area too, because you can't rule it out until it breaks down here, guys. Colin, you can't roll this thing out until it actually breaks this. Then you know, like, all right, this thing is done. Let me, like, not that it's done, but it's just not going to be on this rip. I would honestly think you need to pull back and see. I don't know how much more buying you're going to get. How many of these people don't start taking profit or taking a piece off? Again, if it's institutional ownership, this thing can keep going, and you could have more short squeeze. You'll have to look at the short float. I can get that information for you. I can see how many shares are being shorted. I mean, unless you can too, unless you have a service or a way that you can do it, that's fine. I would look at the shares that are floated. So I would put the first level I'd be looking at is 2091, 21 or 2091. It's an area. Maybe it pulls back into 2070ish. So look at the high 20s. See if it starts to pull back and you start to see a curl. And you want to see on the pullback lower volume. You want to see the volume like low. Alright? You don't want it to be like up here. You don't want a volume bar that looks like that, where it takes out the past 3 days of selling. Alright. Thank you guys. Listen, tomorrow morning, like, share, and subscribe if you could. I hope you guys found this information valuable. Google, thanks. Sorry, Ray. I almost forgot about that. Look at all. I got to clean these charts up. Google's starting to curl back down off of this level, off of this 120, 121 area. Let's go to the weekly and then the daily. Where can we get Google to get? If Google comes back down. So Google's holding a 100-day weekly average. All right, we got to watch that. It's wicking right off of it, but it's also wicking above. The volume has been there for the upside. Let's bring up the daily. Let me pan this out a little bit. So we're riding the 50. So I can tell you right now, if Google does not hold this 50-day moving average, I'm looking for a short on Google. And I may swing trade that. That may be a swing trade. All right, you could ride it down to 116. You know, 115 or 116. I mean, you do have a gap here where this red box is. There is a gap there. So the volume's been light. Okay, the volume's been light. Well, let's see if if the markets start pulling back, ultimately you want to try to short bounces also if there's not a lot of volume. I don't want you just to take it short just to take it short, because it's below its 9 EMA. You guys probably can't see it that well, but look, rejection. Tried to break it and gap down below it. You know, it sold off, but it got bumped right back up off of the 50-day. So Google's like, they're kind of holding it up there. Let's go to the 15-minute. Let me make sure I'm seeing everything. Yeah, this is the resistance. It tried to break up above it. It couldn't. It gapped down below this area of resistance. That's a surefire. I want to take it to the short side. I want to take it short. Doesn't mean I will. It doesn't mean I'll get the chance, but chances are that might be the right trade. And the SPY sold off X amount. What did he? See, that's the thing, is it's doing exactly what the SPY does, in a sense. So you want to watch the SPY to gauge your trades tomorrow. Guys, join us 7:30 in the morning. We're going to go through all kinds of charts. Tesla, Amazon, Nvidia, Nikola, all them stupid ass charts, all the mega cap, large cap, mid cap, small caps, all of them, we trade them. I trade them. I trade options, I'll trade futures, all of them. I may be trading early in the morning too, so you guys can come on and witness that. I might be trading SPX or futures. It's hard to say which one, but I'm going to be up early. I'm going to have a game plan. I hope you guys gained some information tonight. If there's anything that I could work on that you guys could give me some feedback on with the live, that would be great. Constructive criticism, I love it. You can tell me I'm a piece of shit. Great. I'll try to work on it. Okay. If I'm not, well, then I'm not. Okay. But if there's something like that I could do for my lives, again, if there's something you guys would like to see, if there's something that I could do to help with the viewing pleasure, please let me know. Maybe if, I do have to learn some editing and things like that. If you guys could, maybe you guys want to send in a link to editing or something where I could learn a video or whatever. Or if you guys have an editing, like if you could recommend an editing site or a download thing for editing that you guys like, throw it in the chat. It would be greatly appreciated. If you guys have any plays, throw them in the chat. So remember, before I go, guys, tomorrow, watch the Fed funds. Just join us live. I'm going to cover it all. I need you guys to realize what's going on in the market now. We might start the second half of a bear market. If this Fed keeps talking the way they do, the market is going to say, okay, you don't want to give it time? All right, then you're going to kill more than inflation. You're going to kill the economy. And you ain't going to be able to raise, or you're not going to be able to lower rates fast enough. And it's going to bite you in the ass, and you're going to have a hard landing. So we're starting to shift to the hard landing, it feels like, after the Fed comments. They don't just say these things. They're telling the market something. So again, this time last year, maybe it's Powell in the heat. He was talking about Volcker this time last year. It's not Powell saying it, but I mean, I don't know. Maybe they just keep raising until they start seeing something. I don't know. I'm not the Fed. But I can tell you, if they do that, they're just going to continue to raise throughout this whole year again, or in next year, if they don't see data, it's going to take an effect. It might just take time. This money that's been borrowed has to run out sometime or another. All right, it's not going to last. Thank you guys for joining. If you found this stuff useful, like, share, and subscribe. I do apologize that it was so long. Sometimes it takes how long it takes. I'm going to try and short things up if that's what you guys like. Me personally, I'll watch video for hours as long as there's information to be gained. So tomorrow morning on the schedule is the data. But first off, we're going to go through the charts. We're going to go through charts in the morning. IvyLeagueTradingYouTube.com. You can find us right here. Just make sure it says live at the bottom of the screen. Hit that like button. Share, subscribe. All right. That's also greatly appreciated. But we're going to go over charts, and we're going to say if the data comes out and the market goes up, this is what we're going to be long, and this is what we're going to be short. All right? We're going to ride the momentum. And then we also might have other news for companies too. I know there was some earnings or something. And guys, we're getting ready to get into bank earnings and earnings. You have CPI next week, and then we're going to have Powell. So we still have a ton of data that's getting ready to fly at us at one time, it feels like. Feels like we just had CPI. I love you guys. You guys have a great night. Thank you guys for joining us. Before you go, please like, share, and subscribe. Please join us tomorrow if you guys get this video and watch it. I think you guys would really like and gain some not only knowledge, but you might make your wallet bigger. You might make your trading account bigger. I can't promise you anything, but I can almost certainly tell you that I could give you some sound advice to keep you in the game, and that will help you with whatever it is that you're struggling with. I need you also to know, if you're just starting out trading, give it some time. Give it time. And I mean give it time. Don't get stressed out. Give it time. Come in here and trade with us. If you have any questions during a trade, or if you say, hey, what do you think about this to the long side? Or what do you think about this to the short side? I'll give you my opinion. All right, if you want me to chart out some charts, anything, I'm here to help. We're all here to help one another. My guy, you have a great night. I appreciate all of you guys for joining us tonight. You guys have a great night. Tomorrow morning, 7:30 a.m., we're going to be live. Come join us. See you all in the morning. Get ready.